Good afternoon. This is Brian Shannon from Alphatrends.net. Today is Friday, the 13th of April, 2012. Let's take a look at these markets here. We'll go take a look at the numbers first. As we can see for the week, S&P was down just under 2%. NASDAQ lost a little bit more than that. And the Russell down 2.5%, really the weaker group lately. Gold was up a little bit. The bonds continued to show a little bit of strength here today, and that's bringing yields back down. Let's just take a look real quick at that 10-year yield because it's kind of interesting. I prefer looking at the yield chart, but I think we were talking about it a couple weeks ago when it got up to that declining 200-day moving average or just above it, and I was saying that we're basically if we break out here, what we were looking at was if the yields had rallied and broken out, it could have been led to a much bigger increase in interest rates. However, the jobs report, which were reported last Friday when the market closed and the market, the rest of the market opened on Monday to digest that news, interest rates stayed low. So, they're back down into this longer range, and they don't look like they're in any immediate threat of breaking out in terms of yields. So, back to the S&P 500. Obviously, the weekly trend is still intact. We're still in a big weekly uptrend, but we're starting to show some weakness here. And we did close just below that 50-day moving average. So the 50-day moving average, we can see somewhere in here. Where the heck is it? What's the price of the what's the value of it? That is. Okay, there we go. We can see it's 137.73. So we did trade or close about, what did that be, about 59 cents below that. First close below the 50-day moving average all year. So this week we lost the 20 and we lost the 20-day moving average last week, but we do have the moving averages crossing. That's typical of a choppy market environment and signals that there's indecision, which we can obviously see by looking at the action. But we also broke that trend line, and it looked like the market tried to recover, Thursday back above that trend line and the 50-day moving average. But today, of course, we saw it break down a little bit further as it gapped down. Now, what I was talking to subscribers about last night was that we were looking for it to pull back down towards this 5-day moving average and hopefully stabilize there. Worst case, we were thinking maybe it would come down to the highs from Wednesday at about 137.5, where we saw some resistance. Instead, we broke that. So that really puts us on guard for early next week, that we want to look at this market with a continued eye of suspicion. 138 will be an initial level that we want to see this market get up and beyond, back above. And the 5-day volume weighted average price, you can see, is right here at about 137.5. So we have to remain on defense. What this market did this week, and this is something I was explaining here as well, is that we gapped down into this prior band of support, which was resistance back in here, so the 138 to 138.75-ish level, and we rallied back up to that level after filling this gap and coming down perfectly to it. We rallied back up to it, and that prior support did in fact offer resistance. So that's going to be a very important next week as well. The highs this week, about, I guess they were yesterday, about 139-ish. So that's going to be an important level for this market next week, and you can see where we saw that resistance form twice in that area. And by the way, we are looking at RealTick. This is the charting platform that we're looking at here, and RealTick is a broker, supported by many different brokerage firms. So go to realtick.com and get a free trial to them, and let me know what you think about it. Back to the market, though. The S&P 500, again, we're possibly just going to consolidate more through time. Somebody had pointed out the possibility of what they were seeing as a head and shoulders pattern. They kind of drew this as the neckline, or actually they drew this as the neckline, which I don't think is the proper way to do it. The main trend line that we've been observing has been broken. And if we look at the possibility, let's just clear all this up. If we look at the possibility of an inverted, or I'm sorry, not inverted, but a head and shoulders top, this being a left shoulder, this being a right shoulder, and if we can't get back up above 139.5, 140, then we'll have a lower high, which could lead to this, head and shoulders pattern being broken. And I think that this is more accurate in terms of the the neckline. So that would be basically be the lows of the week at, let's just call it 136, and the height of this pattern up. So the height of the pattern would be about 142, we'll just call it, and then we'll be a little conservative here and call it 135 and a half. So 135 and a half to 142, we've got about 6.5 points. If it was to break, 6.5 points from this level at about 135 and a half, then that would put us down at about 129 as a potential target, and that would bring it down to here. Now let's not get too nervous about that. We've still got a rising 50-day moving average, but we do have reasons to think that we need to continue to exercise some real strong vigilance here, especially with earnings season really coming in to gear next week. Now, this has been the important level of support for the NASDAQ at about that 66 level, and we can see on the 30-minute time frame some similar lines that have drawn in. This 66 level, basically the lows for the week. We do have a pattern in here on this 30-minute time frame of lower highs and lower lows. So we have the lower highs and lower lows. We have a declining 5-day moving average, and it's telling us that we still have to be vigilant that, perhaps we're going to go down and test 65. That is, break a little bit below the 50-day moving average, and that's possibly what Apple could be doing as well. Apple did not touch the 20-day moving average and bounce the way a lot of people expected it to. That 20-day moving average now at 613.19. So we're a fair bit below that, and it's possible we could be setting up for a test of that 50-day moving average. That 50-day moving average, by the way, is rising at about 3 points a day. So don't look at this as 556 right now, because Monday it'll be 559 if it continues to rise at the same rate. Here we've got a little bit of important support, I think, down near about 595. And if that level in Apple is broken, then I think, so this 595, I think the next level that it's likely to go to is about 550. And that's where we have, we had very little trading in this area. So there could be a little bit of a vacuum to the downside. Now, it's still in a primary uptrend, and I don't think that the majority of people should be attempting to short this stock because it is such a powerful longer-term uptrend, and people have been trying all year to find the top in this stock, and perhaps you have it right this time, but I can guarantee you're going to experience some strong rallies at some point that may shake you out of the position. So if you are doing that, ask yourself, where does it come from? You don't want to short after these big drops. And again, I don't think that it's appropriate for most people to be shorting anyways. I think you're probably better off just on the sidelines rather than trying to, pick that magical turning point in Apple or in any stock that's in a big uptrend like this. And that's something we talk about all the time on alphatrends.net, which if you follow this post to my homepage, through YouTube or wherever you're viewing this video, there is a deal that I'm not a big marketing guy. Maybe I should be more often. But for $399, that's less than half of the normal price of Alphatrends. So it's typically $799. You can get an annual subscription to the full service where we update stock ideas in the markets every single day, have a chat room, and that, anyways, is $399. You have till the end of the month to take advantage of that offer, and I'll post a link. Back to the market, the S&P, the Russell's been the weakest, as we noted on that table. The Russell down 2.5% this week, close to 4% for the month. And the financials are kind of the same, but they've been the big winners. Well, the financials have been the big winners this year. But we broke that 81 level on the gap lower, and then we got basically right up to it this week. So if we take a look at that 30-minute time frame, you can see here that this is the prior band of support that we were talking about as holding, potentially as resistance. It did do that. It wasn't able to get back up through it. We've got the declining 5-day moving average, and what we were looking for today was ideally a pullback down towards this level. We start to see the 5-day moving average flatten out, and then maybe we could close strong. But obviously that did not occur, and you have to be flexible. That's one of I think the number one characteristics of a successful trader is being able to be flexible with what the market gives you, and being aware of the indecision on the bigger time frame. We've got the 10 and 20 day moving average crossing back and forth. That 20 day about to cross down through the 50 day as well. So we're showing a lot of indecision. We've seen the trend line break. We're still kind of we're back into this bigger type of range, and I think that this is a possibility that we could if we break the lows of last week, then we've got a good chance probably of heading down towards about $76.70. So we're going to have to get at least back above 81. Until we're back above 81, the intermediate term should be considered guilty till proven innocent, within the context of, on a daily time frame, indecision, but on a weekly time frame, this uptrend here. So we've got quite a bit of conflicting signals. Hopefully, we work through some of these earnings reports, and it's going to be able to provide us with more clarity here in the coming weeks. The semiconductors broke their important level at about that 35 and a half area. So let's take a look at that. And we, 35 and a half was the level we've been watching in this. Actually, I guess it was 35.20 for 35.15ish. That was that prior support, which did come right up to and act as resistance. So it's not always going to behave that way. Sometimes you can get away with, shorting into a prior level of support. This week, obviously, it would have worked well as it, came up almost exactly to that level. And here's the things that we were looking for is this market on Thursday broke the resistance at this 34 and a half level. We saw the rally up, and then it came right back down. So for the week, the volume weighted average price, we're right on it, and maybe we're going to just begin to turn a little bit more neutral in here, but I wouldn't be surprised to see maybe a drift lower down towards the low end of this range. So we've still got a lot of danger, and hopefully, if you're bullish, that the earnings reports can provide some stability and bring this market back around to digest the bigger gains that it's seen since the beginning of the year. Financials came right down to this prior resistance level and bounced this week, and then they got right back up to this little support area. So that structurally they're behaving as about they should. When you look at the charts, that is support, or I'm sorry, resistance becoming support, and then support becoming resistance. And here, near about that 1550 level, it broke down. So this 1495 to 15 is going to be a very important level for the financials to hold next week. If we break below that, then we could be heading down towards the $14.35 or so level. So again, a lot of mixed messages from the market this week. A real good one that finally went this week was I was thinking of something else, but it was Renren. The short interest surged once again in there, and the that is from March 15th through the 30th, and those guys finally paid the price. They've been really stubborn, squashing all these rallies. So I've been talking about this one a lot. Hopefully you participated in it. There's always going to be good stocks and bad stocks in the market. The key is always risk management and being able to be flexible. So let's just continue to focus on price action. I will probably update another, once a week, at least on Fridays. Otherwise, consider subscribing to Alphatrends. Thanks.